Hello and welcome to the Finance Quarter. I'm Andrew Robertson. Debate around the government's planned changes to the future of financial advice reforms has hit fever pitch. Critics claim the government is lowering standards and opening the door again to the dodgy practices which wiped billions of people's savings in disasters like Storm Financial, Westpoint and Trio. Others say the reforms that flowed from those collapses went too far. So how are we consumers stuck in the middle meant to know who's right and who's wrong? One thing we do know, though, is that the corporate regulator ASIC remains seriously concerned about what it's seeing in the financial advice industry.
All I do is appeal to the industry to really work really hard to win the trust of Australians, because with superannuation, we need a financial advice sector that we all can trust, and frankly, I mean, I personally as an individual. That is something, I think I'd like to go and see a financial advisor that I don't have any concerns about. And I think all we've seen over the last few years certainly doesn't contribute to that environment of trust and confidence. And I think to achieve that, they need to go way beyond the law and meeting the law. They need to actually do what's needed to actually win the trust of Australians.
Mr Medcraft was speaking at a Senate inquiry into the regulator's slow response to a fiasco at Commonwealth Bank financial planning. Commissions were at the heart of that scandal, but surprisingly, one of the government senators on the inquiry believes commissions still have a part to play in the financial advice industry.
For example, I'm a financial planner and I come to you and say, look, I'll give you financial advice, you've called on me to advise you, and I say that's $3,500. People are going to shy off that in many respects, especially if they've, say, got $100,000 to invest. They say that's too expensive. Then they do not seek the advice, saying the upfront fee is too much. If there's a small commission coming out, and I say small, then you don't miss it so much. You may then continue with the advice.
So are the government's planned changes to the future of financial advice reforms going to make consumers worse off? It's an issue which has polarised people even within the financial planning industry. The Association of Financial Advisors supports the government's position, and its Chief Operating Officer is Phil Anderson. Phil, the head of ASIC, as we've already seen in the program, says that the financial advice sector is one of the riskiest sectors he regulates, that the sector has a sales-based culture that has to change. What do you say to that?
Well, Andrew, I think the inquiry that they're looking at is specific to some issues that have happened in the marketplace recently, much of which dates back to things that happened before the GFC, and we appreciate the comments that they have made, but they, in their role, are looking at things that go wrong in this industry, and it's a small fraction of the market where those problems exist.
Your association is supporting the changes that the Abbott government wants to make to the future of financial advice reforms. But surely at the very least that's not a good look for an association like yours to be seen to be opposing the original reforms, which were years in the making, have only just begun and were designed to protect consumers.
Well, our position has been consistent the whole way along. The views we have now are the views that we had back when the original legislation was put before the Parliament. In fact, our views were strongly expressed to the Parliamentary Joint Committee inquiry in early 2012.
There is a big debate about weakening the best interest test, rightly or wrongly. I mean, how will the clients of your members be better off if that test is weakened? Okay,
with the best interest duty, the related obligations, there's 4 of them. The best interest duty is one of those 4 obligations. There are 7 steps in that best interest duty safe harbour. We're talking about the removal of one of them. Now but it's the one step that forces financial planners to go the extra mile for their clients. Well, what it forces financial advisors to do is quite unclear, because it says take any other step that would reasonably be required to act in the best interest of your client. Now the problem with that is no one actually knows exactly what is required.
The government is planning to reintroduce commissions into some parts of the financial planning process. What are your thoughts on that?
Well, the financial advice industry and the broader financial services profession have moved away from commission-paying products over recent years, and we fully support where we're at now, which is the removal of commissions on investment and superannuation products. The One exception there is the general advice exemption, which we don't believe is applicable to financial advisors because our members have close ongoing relationships with their clients, and that's not consistent with the provision of general advice.
Many people will also would be wondering why the industry is fighting so hard to stop people knowing what commissions they're paying, and also stop them having the option every 2 years to keep paying or to stop paying.
Right, there's a couple of important issues there. So there's first of all the opt-in requirement. We believe opt-in is legislative overreach. No other industry is required to get their clients to re-sign every 2 years. We also recognise that there are significant potential risks for clients in opt-in, in that if you miss it accidentally or unintentionally, you're irreversibly terminating that advice relationship, and that might be because they...
But in reality, we're talking about people that, say, bought insurance 10 years ago, haven't seen the person that sold them the insurance for probably 9 years, and you know, they're being offered the chance to stop paying that man a commission for not doing anything.
No, Andrew, they're not, because the opt-in obligation only applies to new clients beyond the 1st of July 2013. So it doesn't apply to those old clients who might be on trail commission arrangements.
There is a perception, though, that the industry is trying to hang on to these conflicted payments. I mean, how do you break down that perception and win the trust of the Australian people and get more than 1 in 5 Australians to use your industry services?
Well, if we look at the future of financial advice reforms, critical to that is the removal of commission on on superannuation and investment products. We're absolutely supportive of that and committed to that. That is a fundamental change that this legislation has delivered. We're not backing away from that. That is here to stay. The other things that we see, the best interest duty is here to stay. All we're arguing for, and we have consistently argued for this, is let's give advisors certainty as to what they're required to do, so the other steps requirement does not add anything for consumers or advisors. We support the repeal of that.
Well, Phil Anderson, I'm sure this debate has a long way to go. Thank you very much for your time today.
Thank you, Andrew.
Well, as I alluded to at the start of that interview, the AFA's position is not universally held within the financial planning industry. Suzanne Haddan is Chief Executive of independent financial planning business BFG Financial Services. Suzanne Haddan, in your view, what risks to the consumer will be reintroduced if the government goes ahead with its proposed changes to the future of financial advice legislation?
I think we have, again, an increased risk of the consumer not knowing what they're paying for the advice. And I'll give you an example. We've had a couple of new concepts introduced, although us in the profession know it, but a lot of the public don't. One of them is called scaled advice, and scaled advice means you can come in and ask me to just look at one area of your financial circumstances. The problem is that, let's just say, for example, you came in, you had an inheritance, and you came in and said, Suzanne, I want you to look at just investing that inheritance. I would be working through my facts on you, and you may say, I've got a large mortgage. Well, that would be a trigger for me. My professional judgment would come in and say, gosh, I don't know if we should be looking about investing this money. Maybe you should be thinking about paying off your mortgage. One of the problems with the reduced protections of FOFA is it doesn't have that catch-all of me being obliged to use my professional judgment to guide you when you inadvertently scale the advice, reduce the areas that I look at. That's one concern.
So you're arguing that would give the financial advisor the opportunity to choose the advice that best suits him or her?
I think it would give the opportunity for behaviour to skew that way, for behaviour to guide you, yes, let's look at just investing the money where that's not in your best interest.
That section of the best interest test the government wants to remove is the section that probably obligates financial planners to go the extra mile and lift their standards, but we've just heard the Association of Financial Advisors say that section created a lot of uncertainty for financial planners, and they didn't know how to meet that part of the test. I mean, what's your response to that?
Well, a certain amount of being uneasy for the financial planner is probably a good thing. When you be very clear on the rules to meet the best interest, it actually also gives those, hopefully a minority, who don't want to do the right thing by clients, the opportunities to work around the law. Whereas a bit of a catch-all, principle-based, that says, you know, basically use your professional judgment, doing the best interest, keeps us all on our toes, and I actually don't think that's a bad thing.
Now, the government's planning to reintroduce commissions for general advice, and the Association of Financial Advisors, again, as we've just heard, says that won't affect its members because they don't give general advice. What are your thoughts on that?
I don't want to give the impression that there's a rogue financial planner around every corner, because of course many try to do the right thing, and the issue is, though, general advice, once you make it very clear how to give general advice, earn a commission and still comply with the law, I think you're opening a door to those that aren't as scrupulous about how they deal with the public. Give you an example. You could have a financial planner that's just licensed to a particular product. They want to sell one product, maybe two. So they write out to all their clients saying this product, they don't look at the particular circumstances of each client, so it's general advice. They can then get applications sent out and signed and invest some money and earn a commission. That's the loophole I'm worried about.
Well, we've heard the views of the Association of Financial Advisors. Now we've heard your very differing views. For people watching this program that aren't experts, how do they know who's right and who's wrong?
I think the important part is, does the legislation clearly protect you to know what you're paying for and what service you're getting? And to me, the legislation is down here. The requirements of giving advice and being a professional are up here. So we still have a big gap. So be careful where you seek advice from, and my strong recommendation is to make sure they belong to some professional body that has standards well above FOFA, because FOFA in isolation will not protect you.
Suzanne Haddan, I'm sure we'll be talking more about this. Thank you for your time.
Thanks, Andrew.
Well, that's all for this special FOFA edition of the Finance Quarter. It's a big issue which won't be going away. Most financial planners are good people who do have their clients' best interests at heart. The industry, though, does seem to have a blind spot when it comes to conflicted payments, which is holding back its credibility and its growth, as well as keeping the door ajar for the rogues. Thank you for watching, and we'll see you next time on the Finance Quarter.